Rand a little bit weaker this morning, but yesterday getting down to 6.74. Really, the euro also strengthening a bit. And it looks like there was a bit of risk appetite coming back into the market yesterday.
Morning, Stephen. Well, yes, risk certainly seems to be back on, largely in our view boosted by the fact that advanced retail sales data from the US came out much better than expected. So certainly it looks like as far as risk is concerned, as far as investors are concerned, they've shrugged off the hike in reserve ratio that we saw in China, and fears over global growth seem to be somewhat diminished at the moment. But of course, we still have other data coming out this week, and primarily today, industrial production data. So yes, the Rand has held steady in that narrow trading range between 666, 682 that we've seen recently, but a lot more risk to the Rand going forward.
And that euro also looking pretty firm yesterday, and that's just by some of the bad news we've seen coming through in the Eurozone this week. So right at the beginning of the week, we had Standard & Poor's downgrading Greece to CCC, so the lowest rating that it has for any country. And of course, we still have no consensus within the Eurozone and those finance ministers on a Greek bailout at this stage.
Yeah, Stephen, that has been a bit of an anomaly. I think the story there really is the fact that the euro's held up primarily against the dollar, and that's because both currencies are beset with such large problems. So both are, the euro's held up well against the dollar, not necessarily against a basket of other countries. And at the moment seems to be supported largely by the fact that the ECB is in a rate tightening cycle, whereas in the US, Fed officials still have yet to make an announcement on when they might begin to normalize policy in that country. In fact, there are whispers coming through of even a possibility of QE3 should the data out of the US continue to be disappointing. So the euro seems to be buoyed by those factors at the moment, and the Rand is playing tag along.
A couple of factors yesterday to perhaps consider. We had the South African Reserve Bank's annual report, and it's reporting a 1.2 billion Rand loss from a 1 billion Rand loss the year before. And it looks like the strong Rand having a hand in that.
Absolutely, Stephen. The Reserve Bank's loss widened in the last financial year, primarily due to the costs related to reserve accumulation. The bank indicated that it had bought $10.3 billion worth of forex in the last year, and the costs of sterilizing that have increased, and so the Reserve Bank actually posted a loss. So it'll be interesting to see what the trend is going forward, because despite spending a large amount of money on trying to accumulate forex reserves and then having to incur the cost of sterilizing that, the Rand strengthened by about 14% against the dollar in that same period. So going forward, it'll be interesting whether the Reserve Bank will continue to accumulate reserves aggressively, which is what they've indicated that they would do. But as the costs increased, it might become prohibitive, and it would be interesting to see what direction or what stance the Treasury and Reserve Bank are going to take on that issue.
We also had President Jacob Zuma's budget vote yesterday, talking a bit about government's contribution to job creation. Any potential Rand impact from that?
It didn't seem, Stephen, that the Rand reacted much to what the President was saying. He again emphasized the importance of job creation, indicated what government had been doing in the situation. Government, he indicated, had been expanding its labor force by about 133,000. So certainly the government is coming to the party, and that he would expect to see a similar response from the private sector. But it does seem that at that stage the Rand directions were largely still dictated by international developments and not specifically that speech.
Well, you chatted about the US retail sales yesterday, those advanced numbers. How about the South African retail sales today? Standard Bank among the more bullish of the forecasts for those retail numbers.
Yeah, we certainly are, Stephen. We've penciled in a growth rate of about 6% for April. We think that the effect of the Easter holidays may have boosted sales in the month. But looking at Q2 as a whole, it looks like consumer confidence may have slipped in the quarter. Consumers are being pressed by higher fuel and food prices. So we don't think that retail sales are going to be able to continue to grow at the same rate that we saw in Q4 and in Q1 of this year. They grew at quite a phenomenal pace, and we think that after April we're going to see quite a pronounced deceleration in retail sales. So this is going to be, in our view, one of the last good months in April.